Welcome everybody, I'm Genevieve from OpenMarkets and today I'm with Oughton and Andrew Coloretti from Giles Wade. Welcome gentlemen. And we're here to talk about the investment outlook for 2015. So I'll start with you Jeff. What is the outlook for 2015?
Well, the slow and uneven recovery looks set to continue both abroad and at home during 2015. Abroad you've still got the US leading the way and a strong recovery underway. In Europe it's still sluggish, and in Japan it's still sluggish as well, and they're still struggling to handle that unsustainable debt that overhangs the outlook. And amongst emerging economies things are mixed too. They're still growing stronger than elsewhere, but they're also slowing a little, in particular China.
So what are the risks involved?
I think the key risks lay around geopolitical events and the tensions that are in governments' fiscal positions and the promises that they've made their citizens all around the world, including in Australia. And also, I think the risks are that the Fed may well, as they take away the punch bowl, unsettle markets.
And Andrew, what are your thoughts around asset allocation, comparing 2014 and what you're going to reapply in 2015?
In 2014, even in late 2013, we were very bullish on positioning the portfolios with an international bias, and we progressively increased that weighting through the year. We like the unhedged nature of using domestic ETFs listed on the Australian Stock Exchange. So the bias was the US, and the portfolios have performed very well. We see that theme continuing in 2015, still with a bias towards the US, and also some defensives in consumables and healthcare. And that really should continue to play out. Also, as cash rates may continue to come under pressure in the domestic environment, we still like listed hybrids and also notes. And whilst there's an inquiry with the Murray report, we still believe that there's good value and an interesting yield. So they're the two areas in assets classes that we like through 2015.
So what do you think the key themes or sectors that are likely to outperform in 2015?
Well, carrying on from a potentially falling cash rate or low continued yield environment, we believe that the yield play will continue through 2015, and the banks will as well as Telstra, will be well supported. Even though we like healthcare, it's a bit expensive, and that's the dilemma for many investors as to when to get exposure to healthcare. So domestically, the materials and the energy stocks from a valuation are looking very attractive, and those that are generating a reasonable yield, we still believe long term are attractive for clients. So a mixed bag, a stock picker's market, but we're looking at an 8% gross return through 2015.
Well, thank you for your time today, gentlemen, and we look forward to seeing you next year at our next quarterly update. On behalf of Andrew and Jeff, we wish everyone a happy holiday and all the best for the new year.